Hi there, hope you're doing great today. In today's quick video, we'll share a few surprises that we uncovered while investing in real estate. But before we begin, as usual, our videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So let's begin. The very first surprise is that there are always challenges, and entering the market, the timing is never perfect. For example, a couple years ago, there was a ton of competition, a ton of deal flow, ton of deals to choose from, but it was very difficult to get deals done, namely because there was a lot of competition, bidding, overbidding, in many cases even overpaying for assets. In today's market, there isn't as much competition, but deal flow has reduced substantially. It's also more challenging to partner up with others in terms of aggregating and capital and pulling resources together. So the timing will never be perfect, but time in the market versus trying to time the market always wins in the long run. As long as, again, you're adhering to good underwriting and investment practices, keeping it cool, level-headed, and not making emotional decisions, and figuring out how to get the deal done versus whether or not you can get it done. Again, not at all cost, but finding a way to get the deal done, or how to make that intended purchase or investment to the extent you're looking outside of syndications, for example. Number two is that there are always surprises. Real estate is a fixed asset, long-term asset in accounting terms, and requires a long-term outlook, horizon, mindset in mind. Things are not going to happen overnight. It's also not something you can easily liquidate unless you're investing in a REIT, which is more akin to the stocks and bonds alternatives out there. But it requires patience. It requires time for that value to grow, depending on what business strategy you're applying or what your business plan is. But it requires patience. It does take time, and naturally, when you're looking at those longer term horizons, 5, 7, 10 plus years, inevitably things will happen, things that you could not have predicted or anticipated, which is why as you're approaching those investment opportunities, it is important to consider the risk factors, how you can mitigate them, or can you mitigate them? Is this something you're comfortable with? Do you have adequate reserves or a rainy day cushion if or when you hit those rough waters of compressed or negative cash flow? Do you have appropriate insurance in place, as well as your extended partnership team with attorneys, accountants to help you think through those challenges, lenders as well, if or when you hit those. Number three is that I like to say, be careful of glossy high returns. They're definitely exciting to see, but look underneath the hood. Peel the onion. Make sure you understand the assumptions driving such returns and the risk associated with that returns. A common example we'd like to give is that, for example, a high leverage deal will typically yield also higher returns, but in a market like this one, that may be problematic, and such deals could go from above water to underwater very quickly. So again, there's no right or wrong answer. It depends on what your own risk tolerance is, and whether or not you're prepared to work through such risks, which typically requires a structure, more liquidity, and leaning into deeper pockets to save the deal if in the specific example we gave where it is underwater. Number four is that it's important to, as you look under the hood It's important to vet the numbers, vet the underwriting, because again, those surprises inevitably occur. You cannot forecast anything and everything, and certainly making sure you feel good with those underlying assumptions and the risk. And last but not least, real estate is real. It has been, at least for me, as I started investing now years ago. Yes, it does take time, but it's great to see those income streams starting to stack up over time. It requires patience, and really staying true to your own risk tolerance, investment criteria, and investment objectives. But it is real. It's something that enabled me to create more optionality in my own personal life, and gave me the opportunity to transition to real estate entrepreneurship full time, and leaving the W2 world or corporate America behind. Again, that was my own goal. I'm not saying that's everyone's goals, because everyone has different objectives, but real estate is indeed real. So we hope you found today's video helpful as to some of the things that surprised us, or me in particular, over the years. And if you did, please like, share, and subscribe, and we'll see you at the next one.